Welcome to the Best Team Wins podcast with Adam Robinson. He's talking to today's industry leaders and entrepreneurs about the people side of their business.
Welcome to the Best Team Wins podcast, where we feature entrepreneurs and business leaders whose exceptional approach to the people side of their business has led to incredible results. My name is Adam Robinson, and for the next 25 minutes, I'll be your host as we explore how to build your business through better hiring. Today on the program, we are kicking off 2018 with some thoughts and predictions. I am joined here by our producer, Kristen Calloway, who has some things and a giant stack of stuff on the desk, and we're going to run through them. So, Kristen, what do you got for us today?
All right, so last week we made our 2018 predictions and we reviewed 2017, and today we're taking a deeper dive into 2018 predictions, but we're going to look at other people's predictions. PR people love pitching, what are your 2018 predictions? And so I have a bunch that people have made, and we're going to start off with James Mineka, the chairman of McKinsey Global Institute. He says you'll probably not lose your job, but it will change. He says that jobs will fall into three buckets: lost, gained, or changed. And I'm interested to know what you think what are some of those jobs that might change, be lost, gained?
Is he referencing any kind of automation as a catalyst for that change?
Yeah. Up to 1/3 of the workforce may have to learn new skills and change occupations by 2030 is mentioned here. And then also there will be robot repairers. And a lot of people are making predictions about needing CLOs because jobs are going to change so much that you're going to need somebody to implement training to help those people learn their new skills.
CLO meaning?
Chief Learning Officer.
Okay. Yeah, I here's the thing. I think you could take that headline, right? The headline is 1/3 of jobs are going to be changed through automation or technology, and apply that to the late 1800s.
Yeah.
And say 50% of all jobs are going to be eliminated in 20 years. And yes, that's true, but all of those jobs were replaced and then some, because the resulting positions from the technology that were created far outpace those that were eliminated, and created the middle class in the United States in the process. Yeah. And so using rudimentary farm implements to work your own plot of land, right?
Yeah.
Moving to a factory job, it may not be what you want to do, but beyond the notion of the kind of work you want to do or choose to do, the kind of work that's going to be available for you to do in this country will certainly change. But the tasks that are going to be automated are those that deliver low value or are not efficient or can be made much more efficient through automation. But you referenced robot repair. I mean, you think about it, the destruction of those jobs, we've seen this now in economic cycle after economic cycle, will be the catalyst for the creation of a whole new category of jobs that, yes, will require people to use new things. And this alarmist mentality, I mean, it sells eyeballs for sure. Right. People want to know, is their job getting eliminated? But the reality is this has always been happening. We don't need haberdashers anymore, right? Right. We don't make buggy whips. Right? I mean, this happens. The world moves on. Humanity evolves, and there are 4 million unfilled manufacturing jobs in the United States because people's skills aren't up for the challenge.
Right.
So if we have new economy jobs. As technology enables lower cost manufacturing and innovation, and making stuff in the U.S. again has become profitable. The labor arbitrage play with China is gone, largely. There's plenty of opportunity for people to take advantage of it. So I don't I worry about the short-term transition required to get people ready, and there programs in place should provide some kind of a safety net or retraining opportunity for those who choose to work.
Yes.
But I'm not worried. I think we've got plenty of opportunity ahead when we're changing the plasma drives on spaceships someday. Plasma drive repair technician will be one of the hardest to fill jobs.
Just launch me out into space.
75 years from now. There's my prediction.
Great. Yeah.
Parents, get those kids into that plasma drive operator program.
Get in there. Well, I think that's the interesting thing, is that we've never had change that moves so quickly ever before. So I think that's why people are always, they're like, my job's going to be gone tomorrow, like cashiers. One day they had a job and the next day they were out of business.
Well, we still have cashiers. Okay. We have fewer of them.
Yeah.
But let's explore just momentarily the root cause of automation in the checkout line. When you artificially inflate the labor cost by raising wages, which you could argue is good or bad. I'm not here to argue it's good or bad as a societal benefit, but what I'm telling you is when you artificially raise the labor cost, as in businesses don't need to pay a human being $15 an hour to run a cash register. There is a labor cost at which the business says, if I build a system to automate this, customers stay as happy or get happier, and we stop overpaying for this. And as labor costs rise for unskilled retail or service positions, businesses will increasingly look for ways to automate those roles. So the acceleration of automation in these positions is being exacerbated by artificial increases to labor costs. So paradoxically, the policies intended to help people in those jobs are speeding the demise of those jobs, which I find interesting, but that's not how the world works. When politicians talk about this stuff.
Right.
But that's the economic reality.
Like McDonald's going to a self-checkout.
Of course, because
situation.
you can't make money selling McDonald's hamburgers when your cashier makes $15 an hour.
Yeah.
It doesn't work. So the net result of artificial increases to the minimum wage, again, I am not arguing that that's good or bad. I'm arguing the economic reality is the business can't afford to operate because if there's no profit incentive, there's no risk incentive. So why go through the risk of being a business owner if there's no profit potential or sufficient profit potential? Rises to labor costs, eliminate that profit potential. Businesses will seek to create that profit potential, and they're going to do it by automating high-cost, low-skill positions. And that's why when you raise the minimum wage, you lose jobs. That's an economic reality, not a social commentary.
Thank you for that interesting discussion. Moving right along to, Wharton professor Adam Grant says artificial intelligence will help us with creative projects. I think this is really interesting because we do a lot here. He says, AI is going to help us learn from our own successful routines. Interesting. What do you think about that?
Well, I think Adam Grant is awesome, and I've read everything he's ever written. I think he's very good. I'm having to guess what he's getting at here, but I've read some articles around the automation of creative industry and that AI will lead to the elimination of the artist class, right? Where AI can paint its own pictures or do its own things. And here's the way I've heard it described this way. I'm going to paraphrase.
Okay.
AI is capable of composing music.
I've read about this.
Okay. But AI is not capable of inventing hip hop.
That totally makes sense to me.
So once the pattern exists, it can be automated, but creativity will always create the templates. So in a commercial creative production capacity, the jobs will be drawing the lines, not filling in the paint by numbers, if that makes sense.
That makes sense.
I believe you will see fewer rote creative positions in business. I think you will see more higher end, more subjective, creative, true creator type creative roles. That's what I think. I think AI is really interesting. You see examples of AI using these algorithms to create art. It's really interesting, but someone had to build a template.
Right. Well, like Narrative Science, their product is basically writing reports on data that they've collected.
Right. Narrative Science, so it's a fellow growth stage company here in Chicago that automates report writing for financial services analysts and other things. But someone has to build the algorithm. Someone has to tell the machine what the rules are.
Right. Okay. Next
We're not building Terminators yet. That's my summary statement is we will not have Terminators painting beautiful works of art anytime soon.
Well, that's positive. I think that's positive.
Although someone should make that T-shirt. I want to see a T-shirt of a Terminator stripped down to its metal core with its giant red cyborg eye, holding an artist palette and paintbrush painting the Mona Lisa. That's what I want to see that.
You heard it.
The
Go out there,
the Leonardo
make it happen,
T3000. We got off the rails here a little bit. Let's continue.
All right. Next up, we have Sally Krawczyk, the CEO of investing platform Ellevest. And she says that companies will start paying managers for hitting diversity goals. And this is her statement. Diversity actually outperforms meritocracy. The research is clear.
I disagree.
Why?
This is the social commentary episode of The Best Team Wins. Because you can't control the uncontrollable. Unless, preface, I am not saying it's good or bad for societal goals, different. Unless you put a quota system in place, how can managers manage to a diversity number? I think it's impossible because you cannot control the qualifications of the applicant pool based on gender, race, ethnicity, sexual orientation, any of those things. You hire the most qualified person. So unless your policy is to hire in accordance with the population makeup of your labor pool and stick to that. So what's the ideal? In my opinion, the ideal workforce makeup is one that exactly mirrors either your labor market or your customer base or some combination therein, so that you get a full perspective for the people either buying your product, using your product or service, or that, from where you're hiring. And so, and we care a lot about that here at Hierology. I want to hire more engineers who are female and diversity candidates. I can't make that happen. I will hire every qualified engineer that applies.
Right. But I do think that there is the space and the opportunity for HR managers and the folks that are recruiting are to go out and actively seek a larger, more diverse applicant pool versus, and I think this is where this comes into play, is that folks they're recruiting their friends, and typically friends look like you, and so on and so forth.
Right.
And so I think there is an opportunity for HR to go out and actively recruit.
I don't disagree with you. If the statement was managers are
Yes.
going to be held to diversity hiring numbers, I think that's pretty tough. It's a pretty tough thing to hang on a manager trying to hit a operating objective.
Yeah.
I think it's laudable and entirely doable for any organization, really, but truly the largest corporations, to have a mandate internally and to allocate resources to marketing the career opportunities into pockets of the labor pool that may be qualified but don't have access to awareness around the job opportunities that are available to them, or that given different opportunities could be qualified. Those are all really important things. Those are HR initiatives.
Yeah. Not
or
managers.
or quasi-government partnerships. That's not your director of operations is not going to be cannot be reasonably held to a diversity hiring target when they have no control over the labor pool. That's what I think. I think they can support it.
Yeah.
I think they could be made more aware.
Yes.
I think training helps. I think hanging a diversity hiring number on a hiring manager is a pretty tough go, because the next thing they say would be, okay, well, how do I do that?
Yeah.
What resources are available to me to make sure that happens? And you end up not hiring the right person for the job in order to hit an artificially created target to meet some social goal, which may be laudable, but it's in direct conflict with what the right business decision is, which is, for the most part, fill the job with the most qualified person.
Makes sense.
Ideally, those things all intersect.
Yes. Yes.
There's work to do.
Absolutely. Next up, we have David Lathrop, Director of Applied Research for office furniture company Steelcase, says that companies will transform their open office. And essentially what he's saying is, currently a lot of offices have open floor plans, open design. And he says that people want more flexibility in the workplace. They want to go to quiet zones. They want to get away from all the noise that the open office space has created. And I think this is actually really interesting. Currently at Hierology, we're about to blow down a wall and build into some more space. And we're thinking a lot about our office plan and our office design. And actually our user research team sent out a survey to our office, and they told us what the folks in the office find distracting or frustrating about our current plan. And they say that noise is like top of mind. Everybody here wants quiet workspace. And I think it's interesting because a lot of tech companies have moved to this like high energy, everybody's everywhere all the time. We intentionally did that here after having cubicles. What do you think?
Yeah, we had cubicles because we took over the office space of a company that went out of business on the cheap. I hated those things, but they were free, and such is the way of the startup. But now that we have the ability to design our own workspace, which is a luxury, frankly, what I know the research proves is that when I make eye contact with my coworker, I trust them more, they trust me more. When I can see the other people with whom I interact, the level of trust, transparency, the velocity of information flow, human capital efficiency, all go up. It all goes up. As a result, it's noisier. So we're making sure, I know, to maintain the community, we're all in this together feeling of this place while providing quiet spaces for people who may want them on demand.
Absolutely.
But I if we're building cubicles, I quit. Like, I'm just this. You can do this podcast yourself. I'm out. No thanks.
We're not we're not building cubicles. We are keeping the open floor plan, the open seating, but we are looking to create some on-demand quiet zones so that people can do some deep thinking and get away from the hubbub.
I think it's great.
Yeah. Next up, we have Laszlo Bock, former head of people operations at Google. He says that gig economy workers may be getting paid less. Specifically, the quote is, "The gig economy is going to get increasingly brutal. These companies like Uber, Airbnb are going to need to make a profit, and it has to come from somewhere."
That is a true statement. They have to make money. Eventually, they have to make money. So my thoughts on this are the inverse of the automating minimum wage workers discussion we had a few moments ago. There is a price below which I'm not driving for Uber.
Yeah.
I am going to argue that they are already at that price.
I think so, because I took a Lyft yesterday, and the guy that was driving me, he was actually a limousine driver, and he was doing Lyft on the side to fill the time when he wasn't in the limo. And he said that it's just not paying anymore, and he's going to have to change jobs.
It doesn't make sense. Like when you could clear $15 to $20 an hour driving Uber back in the day. Or up to $50 an hour as a black car driver in the original service. You know, Uber was originally an app for limo drivers to catch fares between trips to the airport. Mm-hmm. And now they've replaced taxis largely. And the economic reality is Uber can't make money with that model.
Right.
The rates are artificially low. So Uber has raised however many billions of dollars selling rides below market. There is a labor cost below which, or labor rate below which the drivers won't drive. I think they've found that floor. And to have I think riders will pay for a premium, a little bit better experience, which is why Lyft drivers make more. And there's a certain segment of the market that's happy to pay Lyft prices instead of Uber. Mm-hmm. But everyone's still subsidizing. These companies are being subsidized with cheap, flooded private equity money. When that subsidy stops, I mean, the price of an Uber ride should be about 25% to 30% more than it actually is.
Yeah. Actually, I mean, I agree. But it's crazy because now they've made the marketplace think that the average ride should cost $10.
They're going to have a real problem.
Yeah.
They're going to have a real problem. At the point at which they need to make money and the valuation changes from their growth rate to their cash flow generation, these companies are not likely to operate at this scale at a profit. I think they will shrink to get profitable. That's what I think. Because on a gross margin adjusted basis, Uber makes money on rides. So on every ride they make money. It's profitable to them. They make margin on every ride. They just don't make enough margin to subsidize the cost of their growth rate. So they have to get external capital to finance that growth rate.
Yeah.
And in exchange, these shareholders get a ever-escalating valuation as a reward. Well, that will stop at some point.
Yeah.
I think it has stopped. I mean, these companies have kind of hit the upper limit of their valuation trajectory, I think, now is a multiple. And I think those multiples are going to contract. And there's a different discussion.
Yeah.
But I disagree once again with Laszlo Bock on this. I think Uber will try. They're going to find their drivers, flip them the bird, and go work somewhere else.
Yeah.
There aren't many Uber drivers who do it for a full-time job. And there's a better part-time gig than driving people around for $6 an hour.
Absolutely.
And they're going to find they're going to be offer far fewer rides as a result. They're going to have a driver problem.
Thank you for that prediction. Okay, now we're going to Kronos. Kronos has their top workplace predictions of 2018, and this one is number 1. Top organizations treat employee engagement as a financial strategy while thinking creatively about employee experience. Later, they go on to say HR must change their vernacular to better connect engagement with business challenges while using operational data to show how engagement is financially driven.
Yeah, it's a lot of jargony stuff, but I agree 100%. And this is our whole platform here. I think culture is the strategy. It is the strategy, and if you are operating your business from the premise that first we build an exceptional team, first define the mission, and then build an exceptional team in pursuit of that mission, all the other stuff will take care of itself. And for organizations that seek to improve the makeup of their team, go from mediocre to exceptional, and really compete based on the quality of their people, which all exceptional businesses do in some form or another, then tracking those performance indicators and improving them over time becomes the central focus of HR. HR is less about administrating payroll. Those are low value. It's a low value act. It's really important, but it's not strategic. HR has been predicted to have massive strategic value this year, we promise, every year for the last 40 years. I've read some. This is the year HR can really grab their spot in the C-suite. I really think this is the next 12 to 36 months. This is the year that really savvy HR professionals can find ways to step up and impact the business in a really big way and prove cause effect.
And do you think that's because we've been able to digitize HR in so many ways?
Yes. The data's available now. The data's available, so now you can track, measure, and improve these processes. And
I love it.
It's really interesting, and the data that we have, I know, shows direct causation. And and the anonymized data we track across our customer and user base show the same thing. Better HR policy, better engagement, better people practices lead to faster ramp time for new employees, faster speed to productivity, higher profitability per employee, higher retention rates, which also reinforces higher profitability per employee. All of those are good things.
Duh.
All
right. Employee appetite for accessible, applicable workplace data grows. Basically, employees want to have everything they need at the touch of a button, like Google, not like Google, but they would be able to Google what they need for their job. Does that make sense?
That makes no sense. People want to be able to work efficiently.
Yes.
And the definition of that is changing from, where do I go to get, who do I ask to get that information to where do I click to get that information? Yes. And organizations, some are embracing this transparency and saying, hey, look, we'll give you as much as we can, go. And some are still fighting that shift and saying you're on a need to know basis. I think companies that are transparent have a huge advantage.
I agree. I spent some time at a gigantic corporate global office over the holidays. And it's true. Employees really, they just want to click. They just want to say, I want to do this myself. Just let me do it. Just let me go look for the answer. And, when everything's at the click of a button, everything moves faster.
The extent to which your company can make it easier for your people to do their job, the better off you are.
100%.
Those investments pay off.
Absolutely.
And speaking from experience here, those investments really pay off.
That's it for me.
All right. Well, we covered it all today.
Yes, we did.
Social policy, wages, Terminator, Da Vinci's, and Laszlo Bock made his way into the show. And that is always...
I feel like he gets in there somehow. If we're talking about people, Laszlo's going to be there.
I think there's a Laszlo Bock drinking game you could play with HR-focused podcasts. Every time you hear the word Laszlo Bock, hang your head in shame. Ladies and gentlemen, that is a wrap for this week's episode in the 2018 kickoff for the Best Team Wins podcast. We're going to have a great year here this year. Thanks for tuning in. We will see you next week.
Thanks for listening to the Best Team Wins podcast with Adam Robinson. You can find out more information about Adam and his book, The Best Team Wins, Building Your Business Through Predictive Hiring, at thebestteamwins.com. Thanks again for listening, and we'll see you next week.